Hey bull market bully crew. Let's talk about a stock making waves in cybersecurity. Intrusion Inc, ticker symbol INTZ. Cybersecurity is hotter than ever. Is this microcap player worth your portfolio? Don't forget to like, comment, and subscribe for more no BS stock reviews. Company summary. Intrusion Inc specializes in advanced threat detection and data mining solutions. Their flagship product, Intrusion Shield, protects businesses from cyber attacks in real time. The company serves government, enterprise, and small businesses, defending against sophisticated cyber threats. Intrusion solutions save organizations money and reputation in an era of costly data breaches. Financial overview, revenue, profit margins, and growth rates. Let's talk numbers. Intrusion brought in $6.42 million in revenue last year, but their profit margin is a staggering negative 180.85%. They're bleeding money. On the bright side, Intrusion Shield revenue grew by 49% last quarter. However, with a debt-to-equity ratio of 78%, the company is highly leveraged. Compared to industry leaders, Intrusion's financials are far from robust. Analysis of market trends and competitive landscape. The cybersecurity market is booming, projected to hit $500 billion by 2030. Intrusion competes with giants like CrowdStrike, Palo Alto Networks, and Fortinet. What sets Intrusion apart? Their proprietary TraceCop technology using over 20 years of data for advanced threat detection. However, they lack the scale and resources of their competitors, limiting their ability to compete for large contracts. Their focus on niche markets like government contracts gives them a foothold in areas larger players might overlook. Future prospects, growth opportunities, and challenges. Intrusion's $2 million contract with the Department of Defense is a big win, showing their credibility. The company can expand Shield's adoption among small and medium-sized enterprises. But challenges remain. High operational costs and reliance on debt financing could hamper their growth. Competitors continue to innovate, so Intrusion must invest in research and development, a tough ask with limited cash flow. Investment strategies. At $1.85 per share, Intrusion is a speculative play. The stock's 5-year performance shows a 98% decline. Any significant contract or product success could send shares soaring. For long-term investors, wait for clearer signs of financial stability. My buy zone? Around $1.50 or lower. Final grade. Based on financial struggles, niche market opportunities, and competitive challenges, I'd give Intrusion Inc. a C+. It's not a stock for conservative investors, but recent government contracts show potential. For risk-tolerant investors, this could be a wild card worth watching. Here's a bonus tip. Intrusion extended their warrant exercise inducement program, which could bring in fresh capital and improve their balance sheet. While this isn't guaranteed to solve their financial woes, it shows management is actively working on solutions, worth keeping on your radar. That's it for today, bull market bully fam. If you found this review helpful, smash that like button, drop a comment with your thoughts on Intrusion, and subscribe for more stock breakdowns. Thanks for watching, and I'll see you in the next one.